Dear friends of Volumetric Trading, good morning from Eduardo Buratini. Welcome to this video analysis of the S&P 500 and Nasdaq for Tuesday. Today, Tuesday, September 30th, 2025. So let's get started right away with this analysis by connecting a bit to what happened in the last two sessions. As usual, let's start with the S&P wink with tongue sticking out. And the last two sessions, so Friday and yesterday, were marked by a very interesting movement because already on Friday we saw a fairly significant rejection that happened right at 6,660. A rejection at the lows then pushed the price back up to close again at the highs, which were the highs from Friday's session. So basically, it was a day that went up in the first part, dropped in the middle of the session, and then in the final part recovered almost everything, closing right at the weekly VWAP, okay? This information is extremely important because then, obviously, the market was closed, there was the weekend, and on Sunday night it opened with a breakout above this VWAP level, okay? So MMH, we had the first overnight, the first part of, let's say, the pre-RTH session yesterday, which as you can see went up with a volumetric distribution. As you can see here in the profile on the side, it's pretty sparse, pretty, MMH, let's say not par, not well defined. In the main part of the session, on the other hand, there was a much more interesting volume distribution. The first part of yesterday's session, okay? And in the final part of the session, we moved forward by breaking again. Let's say breaking the lower edges of this distribution that was being formed in order to build a new distribution below it, okay? All of this happened, let's say, passing through an area with low volumes. So an acceleration zone, and this situation matches perfectly with what we see in the composite profile. So basically, it's the mapping of the distribution of how the volumes were distributed over several swings, meaning over a longer period of time. Obviously, the most important thing to add to all this is that this phenomenon, which at this point we can fully define as a rejection, happened after reaching some very important levels, specifically this area around 6,730, which comes from last week. So we had some very important zones here, also supported by some key intraday levels, slightly higher up, just a couple of points higher, but we're definitely talking about the same thing, the same area. And all of this, if we look at it more closely, is how it happened. So both the what, which is definitely important, but also how this happened, with some pretty significant and repeated short pressures, okay. So selling pressure. So we can say, in every respect, because of the profile structure, where this happened, and how it happened, that we had a rejection of the highs, okay, of these local highs. Obviously, what does this mean? Weakness for the S&P 500, okay? Even though, well, there had been a pretty significant buildup of volume to the upside. Now, what could this lead to in today's session? Well, actually, something else happened. That's important to consider. Late in the session, the price came down here to make this swing. A potential swing low, so in the Strom short move it hit 6,700, okay? A round number, an important level because it's round, an important level because it's marked as a key level by the market profile, and also important because our volume analyzer identified it as a former long pressure zone. Here it is, it comes right there. And here it basically closes the Sunday gap. And all of this also lines up with this absolutely important high volume node, this cluster of volumes that the price had obviously created at Friday's close in a cumulative way, because of course this high volume node was already there when the first high was made on Friday. So, the swing was definitely significant, the rejection was definitely significant, but it already reached a level that generated its own reaction, because then we see that yesterday there was not only a response at this level, but it was also qualitatively interesting with the absorption of sellers, so it created a support. It reached a support level, creating a new support. So tech, and then there was the settlement, the close. And so, and this obviously happened just a little bit above. Now, what does this mean in terms of possible scenarios we can expect for today? So, I definitely expect a market that's basically in a range. This is really the ideal condition to create a range. Because, in fact, what has it created? It has created a support, and at the moment we could simply be in the middle of a bearish continuation, okay? And obviously, we'll only know this when the 6,700 level gives way, if it does end up breaking. Because in any case, let's remember, the 6,700 level at this point becomes an absolutely crucial level to monitor today. Because at the moment, even though the price is dropping with some resistances, creating resistances basically from these pressure zones, these are resistances that still haven't been touched yet. I mean, we still haven't seen the price, after it reacted here, go back up and face the resistances above. And so, generally speaking, these are still potential resistances for us. So technically, it's a price that, while waiting for new evidence, remains stuck between. So we can definitely expect some ranging situations between 6,720 and 6,720 as the first level, the upper resistance at 6,730, and the main support at 6,700. This is, let's say, the range bound we're currently in. And obviously, the key levels here are exactly these, the ones that set the boundaries for this potentially distributive situation. But there's a catch. So, the significant resistance zones will definitely have much more crucial importance if they are thoroughly tested today before we potentially see another attempt to break the critical 6,700 low point. Because we're in a context where the market, after hitting a low, is trying to come back up, rebalance a bit, and see how it reacts to the resistance levels. Obviously, these resistance levels will tend to lose significance if we see another attempt that maybe fails again. When the price finds itself facing these resistance levels, it's automatically much more likely that they will lose their significance. So at that point, if we were to see an attempt before 6,700 and it holds, we could expect the price to move first towards 6,730 and then ultimately to 6,750, which would once again correspond to a test of this high volume node up here. If the 6,700 level were to break down there, that would be a key line in descent, so extremely important for today. At that point, we would see a continuation of the bearish move, which could take us to 6,675 first, and then again to 6,660, an important low as we mentioned on Friday. Let's also assess this situation from the Nasdaq's perspective. The Nasdaq, as usual, is slightly different. The dynamic is exactly the same, but in a slightly different way because, for example, from a profile standpoint, it has built exactly the same configuration. So, Everything is absolutely confirmed regarding the rejection, also for the Nasdaq. In fact, we can even see that the Nasdaq actually reached the level of last week's +1 deviation, but also hit a very strong absorption level with the analyzer, which we didn't have on the S and AMP wink with tongue sticking out. So here too, the rejection hypothesis is very substantial. But what's the difference? The difference is that the Nasdaq, unlike the S and AMP wink with tongue sticking out, still hasn't reached its next support level, where a move of this magnitude could take it. And there's also a small clue in the Nasdaq's volume profile that makes us think, namely this POC with this area completely undistributed below it. A POC that's unbalanced with an undistributed area underneath. So basically a sort of pseudo-flat zone. This suggests that it's very likely, in the event of a continuation or acceptance below the POC, that the Nasdaq could push a bit further down, and as a result, possibly drag down or further weaken the S and AMP wink with tongue sticking out as well, at least until it reaches to test this area around 24,750. Okay. Which, as we said, just like with the S and AMP wink with tongue sticking out, will be the main descending line. If we were to see another attempt to break through here that fails, so, with signs to watch for today and throughout the day, and the market were to move back above those resistances, which in this case for the Nasdaq are positioned exactly at yesterday's POC, so 24,830, would definitely lose significance. On the other hand, if we see a break or loss of this 24,750 level, then the market could potentially look for support a bit lower, which at this point I would identify as 24,675, this area here, and ultimately, ideally, 24,620, 600, so this 20-point range right here. Obviously, all of this analysis should in no way be considered as a public investment solicitation or as an incentive to take a position. These are analyses from a purely educational and informational point of view. Thank you for your attention. I'll see you later for those who are Volumetric trading clients for the VLIV, live trading with the markets open. Thank you for your attention, and I wish you a good day and good trading.